All right, guys. Hello, everyone. My name's Joshua Radbod. Thank you so much for coming out. Love you all, seriously. Yeah, thank you so much for coming out to How They Built It, a conversation with industry leaders. I want to first go ahead and thank WeWork for letting us have the event here, sponsor the event, and for all the great stuff that they do. I'd also like to thank Saver Strategies, EnterCyber, Chef Brian's Comfort Kitchen, and Cogent Law Group. So thank you all so much. Let's give them a round of applause. And Cheetah, I know you want to say a couple words about DC Startup Week.
Thank you all. Thank you for coming this evening. How many of you attended DC Startup Week sessions today or this week? Oh, more people. So DC Startup Week is going on for a week. Tomorrow is the last day. So first of all, I wanted to thank Josh and his team for supporting us. And this is part of the one of the events at DC Startup Week, as I did not see a lot of hands go up. So it's 120 sessions with 200 speakers in 33 venues was happening all over the Washington, D.C., Northern Virginia, and some of Maryland. So we put together, all of them are free, including today's, right? With free food. That's what we did. So we put a lot of energy behind it for exactly the same thing, how you can learn from or hear from the experts, and also, how you can contribute to the startup ecosystem. So I wanted to thank them all. And we have some good sessions happening tomorrow, a bunch of events at Google DC, where more venture capital people from Techstars are coming up, and also how to make non-profit CEOs, how to make profit off of it, or how to run it. That's a session is happening, panel happening in Google DC. Then also we have another unique event called, sorry to take your time, a unique event called Net Walking. It's basically starting from 1776, 915. So it's basically you walk and network while you are walking. So it's called Net Walking. We already had one on Tuesday, I think. Yeah, so it's Net Walking. So she picks, Jessica Tunan runs that. She picks 20, 30 people, and see every 5 minutes he switches people who you're walking with. So basically walking and networking, right? It's the other way of doing it. So those are the unique programs which you're trying to bring. And in the night, we have the pitch competition at National Union Building. We work with the Washington, D.C. Economic Development to do that. So those are the good things happening. This is 30 more sessions is happening tomorrow in 8 locations. With that, thank you again for coming. First, I wanted to please give a big hands to yourself for being here, please. So without this room being full, it's not as excited as ever, right? So thank you all. And I leave the stage to Josh to take it from here. Thanks, Josh.
Thank you, Cheetah. Appreciate it. Oh, gosh. Okay. So guys, just briefly a little bit about me so then we can get to the experts. I'm an attorney with Cogent Law Group. I work with startups, corporations, hedge funds, and anybody who's trying to get a really awesome idea off the ground. I'm also a co-founder in a startup called the Unconventional Chess Blog. I work with this smart gentleman right here, Elon Becker. Elon has been teaching and playing chess for 16 years. Next week, he's going to be launching online training courses and in person. So if you guys are interested in learning more about chess or improving your game, he's the guy to speak to. So thank you. Okay, so why did I put this thing together? Few reasons. One, I wanted to connect my professional networks all the way from high school to my professional life here at Cogent. I have a lot of friends and a lot of family doing a lot of great things, so I wanted to bring people together and see if we can make some connections. Also, I wanted you guys who are entrepreneurs in the audience, founders, to learn from these experts who once sat in your shoes and learn from some of the mistakes they made to get to their success. Also, I wanted to show you guys some of the new and emerging industries out there and some of the professional opportunities that may be available. So, yeah. All right. Real quick, I love to do this. How many people here are entrepreneurs? Awesome. Awesome. Almost a full crowd. Okay. Now, how many of you are investors? Oh, okay. All right. No, this is good. This is good. It's usually like 2 people. This is great. All right. So all the entrepreneurs, you saw the investors who had their hands up, right? Just kidding. Don't harass them. Don't harass them.
Hello there.
There you go. All right. So without further ado, I'll go ahead and introduce the panelists. From my left, my brother-in-law and best friend, Eugene Poverni, CEO of Poverni Sheikh Group. Andrew Nashed, another good friend of mine, COO of Crypto Capital Investments. Evan Smith, managing partner of Cogent Law Group. Mike Echols, CEO of EnterCyber Inc. and Max Cybersecurity. And Raj Sharma, CEO and co-founder of HealthWiz. Thank you guys so much for coming out and being here tonight. So, panelists, just so we can lay the groundwork for our questions, in 3 minutes or less, can each of you please provide a brief overview of what your company does, how you built it, and when you got started?
3 minutes or less. Start the clock. All right. How are you guys? Eugene Poverni. I'm the CEO of Poverni Sheikh Group. It's a firm that we founded up in Baltimore in 2012. It's a real estate development, construction, and credit firm. So a lot of what we focus on is, frankly, bricks and sticks, and our use of technology is really to help us kind of optimize and execute on some of those strategies. So what do? We find land and we build apartments and self-storage on it, multifamily and self-storage development. We own the construction arm that builds it, and we also run a credit business through a credit fund that we launched about 3 years ago. We provide capital to other real estate developers up and down the East Coast in order to help them go ahead and build their projects and build what they're trying to work on. Before getting into the real estate business back in 2012, I was a practicing attorney for a few years. Apparently, I wasn't as good at it as I thought, so we went and tried to find some other opportunities. I run the firm along with 3 partners. So one of my partners, Ibrahim in Poverni Sheikh, the Sheikh, runs our construction business. Another partner, Paul, runs our credit fund, and he was a Wall Street banker. I was an attorney, and so I kind of oversee, obviously, our internal legal as well as our strategy for the coming years. We have about 32 people full-time based out of Baltimore, and we're actively expanding up and down the East Coast for opportunity. But as far as human capital, we're definitely looking at the DC market. We're looking at the New York market as we continue to try to find things to build. I'm sure many of you follow the news and interest rates and the real estate cycle. So obviously, we have some thoughts and concerns as to where it is, especially on the development side of our business. But we're always looking for opportunity. We feel that it's a numbers game, both on the development and the credit side. The more we see, the more we can do. And the last 6 years have been some of the best 6 of my life.
Love it. All right, my name is Andrew Nashed, Chief Operating Officer of Crypto Capital Investments. We are a cryptocurrency hedge fund based out of San Diego, California. Much nicer weather than it is today there. Let's see here. With 3 partners, extremely blessed. I've been in cryptocurrency since about 2013. I've been jumping in the space, fell in love with it in about November of last year. To be exact, the decision was made. Game 7 of the World Series last year, we decided to open a hedge fund. Quite an adventure, how we got there. But it has been an incredible ride. What we do is we basically take qualified clients, which individuals of 2.1 million net worth or higher, and invest their capital into the cryptocurrency market. So a lot of people don't really know, hey, what's crypto? What's this? What's that? How do I invest? How do I get into Bitcoin? What is Bitcoin? All these questions from high-level investors, and we take their assets and we diversify them in about 4 different areas. We have a diversified portfolio which focuses on the top 20 currencies in the space, technical trading that we've implemented for some of the top traders in the world on our team. We also have a ICO investment arm that's been extremely exciting, with Cogent being the number one in reviewing all these ICOs that come through before we invest in them. And lastly, we have our 24/7 quant-driven algorithms that are working nonstop. So that's basically what Crypto Capital does, how we got here. 2013, man, the hustle was strong. My family owns a catering company out in San Diego. So yes, I can make a great sandwich at the same time as manage your portfolio. So it's a lot of fun, and that's where we are.
I'm Evan Smith, managing partner of Cogent Law Group. Everybody knows what a law firm is, but we came at it from a little bit different direction. The firm's been around for 7 years, but 3 years ago, we rebranded ourselves to Cogent, and doubled down on our alternative model of providing legal services, which is keep our overhead very low, minimal support staff, minimal rent expenditures. We operate out of this WeWork. This is our home. And on the other expense side, which is the professionals, we look for professional attorneys and other consultants who have top-level experience, have been partners in big law firms, have had important positions in government, have all the expertise that you would get at, as good as anywhere you would go. But we're looking for people who want flexibility in their lives, want to be their own boss to some extent, want to decide how much they want to work every week, and are willing to earn less or charge lower billing rates to get that flexibility, rather than working in the big law firm and grinding away for 20 hours a day. So putting that whole model together, we have grown over the last 3 years to, I think, 27 attorneys and other professional consultants operating out of our current facility, and we're looking to continue growing. So that's us.
How's everybody doing? I'm excited to see the turnout because I love entrepreneurism and I love entrepreneurs. And you can be working for somebody and still be an entrepreneur. All right. So I'm the CEO of EnterCyber.com. You can look it up after this. Don't look it up while I'm here. Essentially, it's a part of a bigger play. So I left the Department of Homeland Security as a cyber director towards the end of 2016. And one of the things I recognized was that cybersecurity is not going to mature on its own. So I lead a nonprofit out of Kennedy Space Center, and we also have a core cybersecurity company. But there's a major piece that was missing. And that piece is, if you needed to find a cybersecurity company, whether it be hardware, software, an attorney, no matter what it is, where would you go? You can ask the government people, you can ask cybersecurity experts. Nobody knows because it doesn't exist. So in order to mature cybersecurity, we created EnterCyber.com. It's in beta mode right now, and literally it's going to have a listing of all companies associated with cybersecurity. And you'll be able to rate them, because what I learned at Homeland Security was that companies that are providing services, one, you don't know if you're getting what you paid for anyway. And number two, who are you going to call to ask? So we love the Angie's List model, the Amazon model, where people rate people's that they've used. That's sort of the new model, so that you have an insight from other people that are spending money, not from other companies per se, who may be being paid to say those things. EnterCyber.com will allow people to find, for instance, the guy that helped to build the biggest cybersecurity company in the country. He left, started his own company, but can't sustain his business because nobody knows that he's the guy and that he's on their block. And so we're kind of trying to level the playing field so that there's not $10 trillion cybersecurity companies, and that smaller businesses can play in this game. The market's supposed to be $250 billion within the next year in the United States, in the trillions globally. And everybody who has the capabilities should be able to get a piece of this.
Raj Sharma, this is my third startup. So the first, and all three of them have been in software and products. Because that's the only thing that I know how to do, is build products, and specifically software products. And even though the title says, these are the people who have done it, so that's true. I've done it, this is my third time, but certainly not made it yet. Still very, very hungry, and which is why, I started this company, HealthWiz, about 2 years back. And we'll go into why I started HealthWiz. I don't have a healthcare background, so I have a telecom background, but I started a company in healthcare. And we are right at the intersection of healthcare and blockchain. And what we do is we have built an electronic file cabinet, a digital file cabinet, that stays on your phone. And essentially, it helps you aggregate your medical records from different sources, including your wearables, Apple Watch, hospitals, doctors' offices, your raw genetic data. So it helps you pull down all your medical records from different silos, and then it lets you either share, sell, or trade your medical records with whoever you want to share it with. So today, this is a $150, $200 billion industry, depending upon who you talk to. So everybody in this room, your medical records are being sold today. Did you know that? And that's a $150, $200 billion industry. And there are some data brokers who essentially take your data from hospitals, labs, doctors' offices, turn around and sell it to pharmaceutical companies for marketing purposes, for research, for clinical trials. And we think that that money that data brokers are making should go to us instead of those data brokers making money. So in that respect, they're no different than Facebook and Google. It's just that it's focused on healthcare data. So that's what we are trying to disrupt, is how can we eliminate those middlemen and get this money directly to the end users. And blockchain is a fantastic infrastructure to do just that, which is eliminate these middlemen and create these peer-to-peer transactions between the user who owns that data, has gone through the trouble of aggregating the data, and then turn around and sell it. Data is the only industry that I know where the brokers keep 100% of the proceeds. If you look at real estate, if you have an asset, and by the way, health records are digital assets like anything, like anything else, but if you have a house, an asset, you get 94% of the proceeds, the broker makes 6%. Only in the data industry, it's completely crazy that they keep 100% of the proceeds and we get nothing. That's got to change, and that's what we are focusing on.
Hey, one thing for everybody to know, this event is being live streamed through YouTube. As long as nobody bumps the camera out back there or the sound equipment that's attached to it, the whole thing should be available on tape after the event. So if anybody wants to go back and look at it, I know some people videotaping and taking pictures and stuff, and that's great, but we've got a backup for you.
Speaking of, trading and selling your data, this won't be traded or sold anywhere, so don't worry. Guys, thank you so much for giving us that insight. We've laid the groundwork now. I'm going to pitch some questions at you guys, and then I may ask some general questions later on. This first one's for Eugene. Eugene, can you tell us a little bit more about how your company is structured, especially for those in the audience who are looking to potentially start a real estate investment fund, and what it took to get there in terms of industry know-how, finances, and relationships?
Sure, happy to. So our company's structured in multiple ways, right? So we have a credit business where we lend money to other real estate developers. Give you guys a sense of scale. Our goal is to lend somewhere between 30 and 50 million a year, which makes us very small in the industry, but nonetheless, we're pretty agile, and we focus on the sub $5 million space. The credit business, the fund business, where we make loans, people call us, they need capital in 15 days. There's no way to be able to successfully execute that kind of business if every time somebody calls you for a loan, we'd have to turn around and call our investors for capital. Right? So we run our credit business through a fund structure, meaning we went out, we raised capital, we got the discretion over the capital, so we can go find loans within some parameters, right? Some loan to values, some locations, some loan sizes. And as long as we're inside of that box, we have the ability to execute on it. Initially, we raised $1 million from friends and family. Right, just like our development business. Anybody we knew who liked us, initially we didn't have a track record on the credit side, which means that anybody who would give us money gave us money because they knew us and they liked us versus because they were impressed with what we had done. So we started with about $1 million of friends and family capital, and then we went ahead and deployed it, issued some loans, received some money back, and then we kind of did it again. And instead of $1 million, we went and raised 3, and we deployed it and got some money back. And then after we did 3, we went out and raised 20. We deployed it and we got some money back. And then we went out in the last 6 months and we raised our 20 up to 50. So, we built it from the ground up on the credit side, brick by brick, very similar to the development side of our business. The first development project we ever worked on cost $150,000. We needed $50,000 of cash and $100,000 from a bank. We did one development project, then we did a second one that was $250,000. Then we did a third one, and a fourth one, and a fifth one. Today we've done about 30. But they scaled up for us, right? And as initially we started with friends and family, every time we do a real estate development project till this day, we raise money for the project. We don't have any kind of commingled discretionary funding available for our real estate business. But as we did more projects, once we got through 7, 8, 9, all of a sudden we could talk to people that didn't know us, that had deeper pockets, that were more institutional, and they could look at our track record and say, what have you done? What is your infrastructure? What is your team like? We can trust you with our capital because of that track record. So while initially the development side of our business was also friends and family, today we effectively work with 3 to 4 institutions, and as we do development projects and we find good projects, we work with them to provide our equity, work with our banks and debt partners to provide our debt. So the business is structured a little differently depending on which silo you're in, but both of them for us started in a very similar fashion. We started small, we proved out a model. Again, for us, we are very envious at times on when we look at technology companies and how fast they could ramp up. For us, it was a lot more slow and steady, but like anything else, it snowballed. So we've been fortunate. We think it's a great market, great time to be in the real estate business. It's a good market. It'll probably a good market for a little bit longer, but that's how our business is generally structured.
Thank you, Eugene. That was excellent. To use the real estate analogy, brick by brick, right? Slowly but surely. Real quick, so that was to the fun side, right? What about for the folks in the audience who are trying to become the next flipper? What advice do you have for them?
It's a really hot flipping market. Be careful. Look, the first time on our first real estate project that we ever did, we doubled our construction budget. And frankly, we have found most of the time in real estate, that's the rule, not the exception. So if you're thinking about getting into the flipping business or the real estate business today, when we're 10 years into a good market cycle, find somebody you can partner with who has the experience you need. On your first few deals, it doesn't really matter how much money you make, but if you lose money, you'll never do another one. So, I would highly encourage you guys, if you're interested, look, housing's a great industry, right? If you look at housing demand, housing supply, how much housing wasn't built between 2008, 2012, what the job growth is in your metro, in the DC metro here, versus the housing starts, it's a great place to be. We're huge fans of housing, but if you're gonna start in the business, I would highly encourage anybody here, partner, build the best team you can, pay for the right architect, pay for the right contractor. The first few you're learning, so get the best people you can around you.
Thank you, Eugene. Andrew, so everyone here now knows that you're into cryptocurrencies. If you can, I know this is a much deeper dive for them, but can you just tell us what cryptocurrencies are and how does your fund invest in them?
Great question. Cryptocurrencies, 2008, October, Satoshi Nakamoto, individual or group of individuals, created the first cryptocurrency. It's blockchain, as he explained perfectly as to what it is. The blockchain technology is basically with a currency, and what we are seeing today is a crypto asset space. So they're not all currencies. There are about 2,003 different crypto assets in the space today. What cryptocurrencies are, as I said, Satoshi Nakamoto in 2008 released a white paper, and about 2009 it first gained value with the first sale of Bitcoin actually being transacted with. The beauty of it is it's a trustless and verifiable currency. It is not backed by any one entity. It is backed now by a good 150 million computers around the world and servers mining on the blockchain protocol, the Bitcoin protocol. The beauty of crypto is, the simple way to think of it is it's a new digital age currency in terms of Bitcoin, and there are so many different blockchain aspects that are going to secure data, data on a whole different level. So all those Facebook data breaches, all those healthcare data things, all those law folders after folder after folder that no one knows what's in there. All that blockchain can store. The blockchain can store all that data on there in a breeze. And I think that we're a little far away from really mass adoption. But the basic, I really don't know if there's a real good way to answer that question on a simple way, because I think I made it more confusing than I actually answered it. But regardless, cryptocurrencies, they're great.
Hang on to that.
Andrew, now if you can, please explain mining step by step. Thank you. I'm just kidding. That's a joke.
Yeah, no.
That's a joke. I love it. Real quick, so for the folks in the audience who are potentially thinking about getting into cryptocurrencies, if you can, Andrew, why did you start a crypto fund? And I know there are some folks in the audience who are potentially thinking about starting a crypto fund. What advice would you have for them?
So let's see here. So I would ideally tell everyone right now, this is not financial advice. I have to say that for my attorneys all here. However, there is one thing. Cryptocurrencies is a alternative asset class. So there's real estate, there's derivatives, there's equities, there's, you name it, oil, whatever, commodities. This is a different market. It is a whole different asset class that I tell people constantly, just take 1% of your money and invest it in crypto. Because right now we are in the moment where it is a $200 billion market cap. We hit a high of $800 billion last year, okay? The just simple speculative basic of it all is, if it goes back to where it was, wow, just went up 4x. But if we just grab a 1% market cap of gold, the cryptocurrency market goes to a $5.6 trillion market cap. So thinking of the risk versus reward in today's day and age, tell me what other industry can take you from a $200 billion market cap by just succeeding 1% of the market cap of gold to go to a 5.6 trillion. That to me is maybe the most exciting thing. And in terms of people that want to invest in crypto, as I said, I advise, tell you straight up, do it. Buy one, buy half, buy a quarter of a Bitcoin, buy whatever it is, shape or form. There are 2003 currencies for you to pick. Not all of them are going to be around in the next 2 to 3 years. Where was Bitcoin? Bitcoin's now been the most, I don't want to say the most legitimate and the most long-standing, but it's been the best in my idea, in my terms. I tell people just buy $10 worth. Buy $100 worth. You can buy fractions of these currencies. Now, the idea of starting a fund, God have mercy. I would advise you not to start a fund. There were 380 different cryptocurrency funds opened last year. 80 of them closed in the last 3 months. I tell people this constantly. Having the entrepreneurial spirit, having the hustle, having the grind, having that mentality is beautiful. Keep that ambition alive. But when it comes to creating something that it's a brand new emerging market, listen, 99% of every single other firm will fail. And you need to be okay with watching everyone around you fail. And you need to be understanding that that 1% that make it, maybe you, it may be not. But also, remember one thing. You better have a good burn rate for every single project that you do. Not only a crypto fund or whatever it may be. Meaning, you got to know what you're getting into prior to jumping in. Everyone says, oh, this is a great idea. I made 13,000% last year buying Ripple at 5 cents, and I'm going to go and take individuals' money and invest in it. No, it doesn't work like that. Past performance doesn't dictate the future. And also, just remember one thing. When you're trading with people's money or you're investing other people's assets, that is their livelihood. Their blood, sweat, and tears to go and to create that fortune for themselves. You are now dealing with it. As he said earlier, when you're making money, oh, everyone is so happy. The world is rejoicing. They will give you hand and fist over money. The day you report a loss, hey guys, what's going on over there? 15 different phone calls, 17 different emails. I suggest you watch The Big Short, and one thing when he says to his clients that says, hey, we'll no longer be, allowing individuals to pull out their money, and you see the email chain just continuing going down. At that point, he was down 30%. So just tell people one thing. Listen, you're trading with people's money. I would ideally say, get into the space. Don't do a fund until you know everything about it.
Thank you, Andrew. You can pass down, Evan. Thank you. Evan, so you're a lawyer and an entrepreneur, and you've been C-suite in a few startup companies. What experience being an entrepreneur has helped you advise startup clients?
Well, you're right, Josh, and I didn't mention that before, but I have been, founder or early adopter in 4 different startup companies, CEO of 3 of them, and I think that in terms of the current business that I'm in, which is providing professional services, and there are a lot of different professional services out there, and I think the law firm is an example of one, but I suspect that out in the audience, I mean, how many people are in the business of providing services, or development, or consulting, or okay, so that's pretty common around here. Well, a lot of people who are experts at a lot of things. I think the experience that I had being the person that had to make it happen has certainly helped me understand what it's like to be a startup CEO or to be building a business, and understanding limitations of resources. You have only so much time, only so much money. You have to decide what to do with it, and you don't want to hear somebody tell you all the wonderful things that you could do in the legal field, and we could spend $20,000 right now and do all these great things for you. Okay, but you don't have $20,000, and if you did and spent it on that, you wouldn't have it for your development work or your marketing or anything else that you need. So I think it's looking at it, having sat in the seat of the people that are our clients. And I think this is probably translates to a lot of the people that are providing services. If you can try to understand what it's like to be your client and what resources they have and what they're trying to accomplish, and you can try to tailor your services and your pricing and your structure so that you can meet them where they are. That's the biggest thing that I learned working in startup companies is, you can only do what you can do, and you need advisors who understand that.
Thank you, Evan. So with that said, just, Evan, one more question for you. What mistakes, if you can just name a few, have you seen founders make when starting a company?
Oh gosh, well, I would think I've seen them all at this point, and there's a lot of ways to make mistakes. I differentiate, and even when I was a CEO, I differentiated between mistakes that were just mistakes and mistakes that were company killers. If you make decisions, and you have to if you're starting a business, you're going to make tens, hundreds of decisions every day or every week. And a certain percentage of them, in hindsight, are going to turn out to be suboptimal. So you will make mistakes. You will not make the best choice. The important thing is to try to recognize as soon as possible when you've gone down the wrong path, and just don't be egotistical about it. Don't be committed to following through on your mistakes. If you realize you made a mistake, just say, "Whoop, that was a mistake. We're not going to spend any more money on that. We're going to go this way." I think the mistake that I've seen the most probably is mindless pursuit of something that isn't working or doesn't make sense, or people are telling you that that's not a good path. You have to be open to constantly adjusting your business plan. And I think flexibility, or a lack of flexibility, would be the mistake. Flexibility would be the way to go.
Thank you, Evan. Mike, so I've been working with you on a couple of your startups and companies. You're a serial entrepreneur. If you can you give us some information on how you separate yourself from the competition?
So I started off with a So I've had other companies before, so I've made all of those mistakes, including thinking that you don't have to pay your taxes, right? What happens is when you go to get a loan from the bank, they want to know how long you've been in business. They want to see your tax returns, right? I've also done not use an attorney because they cost money. Well, that could sink you. You don't want any catastrophic issues down the line. But relative to EnterCyber, when I launched EnterCyber, we went with an idea, first of all, to people that were in that industry to get a raw feedback on whether it's truly a problem. People come up with great things every day, but they aren't necessarily anything that anybody's going to subscribe to or buy, right? So you have to be realistic about that. So after doing that, we actually went out on a tour to 4 or 5 billionaires that we know. Hung out with them for the day, chilled, told them about the idea with the idea that to see if they would get excited. So whereas people are usually coming to beg to them, we went out with a confidence that we're going to get them excited and have them begging us. And so in doing that, we figured out, they've got some interest here, right? They understand the market. They understand who the players are. So then the next thing we did was we actually bought the real estate. And what I mean by that is not just talking about the domain or the website, but the cybersecurity marketplace. The cybersecurity marketplace. That name may have more value than the company itself, right? And so we own a trademark, right? And so we're going to also be looking for ways to patent different aspects of it. And so we're focused on owning the real estate, all right? And so after doing all of that, we're a cybersecurity marketplace. Don't you think that as it grows, every hacker in the world is going to be trying to knock it out? So it was very important to go to that community and say, hey, please take a shot at it. So all of these things add up to long-term success. And so we're planning long-term success at the beginning. And a lot of entrepreneurs that I know, and a lot of people have businesses, some of them work, some of them don't. That's one of those things that they don't contemplate success, right? They're so focused on the struggle that they leave themselves vulnerable. And so we're trying to kill vulnerabilities so that we end up with the resulting consequences that we look for.
Thank you, Mike. Just to follow up, I think we can all agree that cybersecurity affects all the industries represented here today. What advice do you have to founders out there, things that they should be aware of in terms of cybersecurity threats?
Okay, so I'm a cybersecurity evangelist, so I won't get excited here and go on for 2 hours. But I'm actually in the process of writing a book because I care about people, I care about the subject. And as a founder, if you're a founder, whatever you're doing should be a passion, all right? You should care about it. I care about it. And the one thing I can tell you from working for the government is that the government's not coming to save you. If you don't secure your own infrastructure, and if you don't care about what could happen to you and your family, and if you don't seek out this knowledge that I'm going to give you a little thread to pull right now, then it's your fault, because people are losing their life savings. Guess what? They don't put that in the paper. They don't put that on TV. There's doctors' offices that have gone out of business because they've been hacked. There are companies that lost their pricing schedules, and so they can't even compete with their competition because there's no more company secrets. There are little kids who have had their identity stolen because a school was hacked and nobody realized it, and then a couple of years later they find out that they owe $500,000. Now, if you don't have a whole lot of money, imagine trying to clear any of these things up, because guess what? There's nobody to call. I said I was writing a book. It's called Cyber Secure Life. The government's not coming to save you, right? You are on your own. If you're not critical infrastructure, right? Or if your loss wasn't over a certain amount, go to the police department. They're not even gonna know what you're talking about, right? So just have that cognizance when you start to buy systems, you start to build systems, you start to collect other people's data, because whereas there's nobody to call, there's breach reporting laws in 48 different states. That in itself will put you out of business. So if you have a small company like EnterCyber, and I've got data on people from all over the country, if I had a breach, I'm responsible for 48 different reporting structures. That puts me out of business, right? So again, vulnerabilities, consequences.
Thank you, Mike. Raj, you have a blockchain-based business. What have been some of both the challenges and opportunities that you've faced, and why did you get into this space?
So one of the challenges has been that we target, end users, consumers, and I think it is unrealistic to expect consumers to understand blockchain, understand tokens, and we don't want them to understand it either. So in the product, there's no reason to, right? But in the product, we have to build in a lot of things in the product so that blockchain and tokens and digital tokens are completely invisible to the consumers. And that's actually a big challenge. I mean, today, the application that we have that runs on iOS and Android has a digital wallet in it. And unlike Coinbase, the digital wallet has keys in it. We don't store people's keys. We don't even store people's data. We don't even have cloud servers to store health data. All the data resides on the phone, which is also another challenge. How do you design a system where you don't have any control over people's data, people's wallets? It's all within their control on their phones. And so to make a digital wallet that holds ERC20 tokens is very, very challenging. And there is an education process. And again, the education process has to be that you don't talk about blockchain, you don't talk about tokens, and yet get people to configure their wallets on their phones and get used to this rewards point. So we don't even call it digital token, we don't call it blockchain, we call it rewards points. Everybody knows what rewards points are. So when you actually trade or sell your health records to someone or participate in a clinical trial along with your data, you get rewards points. That's what you earn. You don't earn some crypto token, or you didn't use blockchain to do it, although that's exactly what happened, but that's how invisible we have to make it. I think in terms of opportunities, again, this is something that is new, has never been done before. That's sort of the exciting part. That's why I left my last company, and it's a big challenge, obviously, to get this done, get consumers on board with what we are doing. But at the same time, after we started, there were a bunch of other companies who started doing similar things. We were ahead of the pack. Today, I think we are the only company who actually has a product. The other people are talking about things and have PowerPoint slides. We actually have a product. You can go to App Store and Google Play, download our app, and start aggregating your medical records. And of course, there are some other unique things about the product, which is keeping all your data on your phone, which nobody else does. So if we do this right, if we execute this right, I think it's a $150, $200 billion market that we can potentially disrupt. So that's the nature of challenge and opportunities from what we are doing. And why healthcare? So one of our co-founders, I don't have a background in healthcare, but one of our co-founder does. He's a practicing physician. He sits on the board of different hospitals, is involved in making IT decisions. So that's how we balance things out. And healthcare is a very traditional industry, at the same time very complex. And when I came into it, it was just like going back into the dark ages, the way healthcare operates. And just that's why I saw tremendous opportunities. And I also felt very strongly that it's not going to happen. Change and disruption is not going to happen within healthcare. Somebody will have to come in from outside. Maybe it is us, maybe it is somebody else. But the change is going to come from outside and disrupt healthcare. It's not going to happen from any of the players within the industry.
Thank you, Raj. I appreciate that. So, Raj, you're also a serial entrepreneur, just like a few others on the panel tonight. You've raised over $80 million in venture capital over the years. How is this venture different from your prior companies, and what knowledge have you taken from those prior companies and put into this current one?
So the prior two companies were both venture funded. We went to venture capitalists. We did a seed round, a Series A, B, C. In my first company, I think by the time I left, we were on Series E, and completely diluted by all the equity that the investors took. And the second company, similar. We raised a lot of money, but gave up a lot of equity. It was not exactly venture funded, but funded by things that look like venture capital. And this time around, I was pretty determined not to go that route because we as founders thought we could do a lot better. And of course, at that time, last year, the ICOs were hot, and we thought that would be the route to raise money quickly. It turned out that we pulled our ICO back right after Munchie was subpoenaed by SEC for doing a security offering and not registering with the SEC. So we pulled back our ICO. We had raised money, and actually we raised money from friends and family, angel investors. We still continue to essentially invest our own money in the company, and we are looking at different funding options. A few things that we learned in the previous companies is that it's when you don't have money and you are starving, and nothing is happening on the product development side, it's very easy to grab whatever comes along, right? If somebody says, I'm going to give you some money, your instinct is to just grab that money, right? Regardless of what the venture capital firm's history is, and without doing any due diligence on the venture capital firm. And what I find out, or I realize, is that most of the venture capitalists are trying to get educated on what you are doing, right? So for them, it's all about education. They're asking questions. So this time around, one of the decisions we have made is to, partner with venture capital firms. If we go that route, not clear that we will, then it has to be somebody who is investing or has invested in healthcare and also has invested in blockchain, which actually limits the universe to a handful of venture capitalists. So those are some of the pluses and minuses and lessons learned.
Thank you, Raj. Appreciate it. Now we get into some of the fun questions that I think are very important. Oh, okay, question.
I would love to hear from the panelists a story of a decision you made that seemed super well thought through and logical at the time, but then turned out to be a dramatic failure. And especially ones that might have a broader application to people who are not in your specific business.
Thank you, Eric.
Sure. So, I'd say one of the bigger mistakes I made, that I was very lucky that it didn't kill me, was I was practicing law for the first 2 years before going to the real estate business. And I figured, we'd build 5 or 6 of these smaller buildings. They're generating some cash. How much more do I really need to live? I think I quit my job. And so I quit my job with, $50,000 in savings maybe. And I projected that these real estate buildings were going to make all this money and rents were going to go up, yada, yada, yada. I would have run out of money in 7 to 8 months if I didn't get extremely lucky. And when I went to quit, my boss said, well, why don't you just work for me part-time while you really figure this thing out? So, I was fortunate they didn't kill me, but underestimating how much funding it was going to really take, at least for me to get started on the real estate side, it would have been detrimental.
Thank you. I have a few minutes left over for Q&A coming up. But real quick, this question's for Mike. Can you walk us through the day in the life of a CEO? What time do you wake up? What tools do you use to manage your time? I think these things would be really helpful for folks.
So all of our ventures, we try to do them independently, meaning that They all, I think somebody said earlier, there has to be a burn rate associated with that makes sense. And so we use a lot of the better tools, the Slacks and all those kinds of things to communicate. But I'm up every day at 4:30. There's no way to get around it, right? And at 4:30, I'm already on the computer at 4:45, and I'm doing stuff. By 5:30, I'm here. My office is here on the 5th floor. I'm here, and I'm making daily videos that go out to my partners, constituency, people that are excited about cybersecurity. Then I'm catching my guy in India as he ends his day so that he can do things to some other websites and things that I'm doing, because SEO is very important. Do you guys know what that is? All right. So the SEO is very important, right? So you come up on the first page of Google, it creates opportunities no matter how bad your business is. It's just the way it is, right? And so we're making sure that those things are taken care of. And then as I go into my day, I'm fighting all day to find time to do things that I need to do as a CEO, because during the course of that day, all of those people that you've tried to engage with, they're calling, right? And one of the most important things is that you have to build that reputation of being somebody that's approachable and somebody that has time to talk to your clients or potential clients. But the business still has to run. Accounting, legal, responding to letters. I'm registered in 10 different states with different programs, staying compliant with those programs. We did a lot of work in Puerto Rico after the hurricane. Wow. So it's U.S. territory, but third world country. And what I mean by that is I'm dealing with the Department of Labor, same Department of Labor, but it's not the same Department of Labor, all right? And so you're dealing with those kind of problems every day. And then by the end of the day, remembering that work-life balance means that you need to try to go home at a reasonable time and try to eat something that's nutritional, and then back on the computer at night. So that's the way it is every day, and that's why I used the word earlier, passionate. You have to be passionate about whatever it is you're doing, or it's just going to be a weight on you, and it's probably not going to work.
Thank you, Mike. I posed this question to anyone on the panel who wants to take it. Maybe Raj, you could hit this. How did you get your first sale, and what worked, what didn't work?
We are still trying to get our first sale. So, in fact, when Mike talked about taxes, I remember that we had to file our taxes before. I missed filing it last year. But again, we don't have revenue, so it really doesn't matter. So, this is, I guess, the bad part of the product or software company. It is unlikely that we will generate revenues. So the company has been around for 2 years, no revenue. It is unlikely that we'll generate any kind of revenue for another 12 months. So that's, and again, we are selling to investors this story, and I, if they ask for projections, I tell them that it is unlikely that we'll generate revenues in the first 12 months. But we do know where the first revenue will come from. So we have been talking to a number of pharmaceutical companies that do clinical trials, and we have this chicken and egg problem where they want us to have thousands or maybe a million users before they actually start getting data from them, and our users want to be paid to for their data. So we really have a chicken and egg problem. But there are some forward-thinking pharmaceutical companies who believe in digital health, who believe in digital health records being owned by the end users, are looking at this space very seriously. So we think that we will sign up over the next 12 months people like that, pharmaceutical companies who are looking to buy data from individuals or who want to recruit and retain participants in a clinical trial. That's where the revenues will come from.
I think also a good point to put into the entrepreneurial mindset of things. And when it comes to the first sale or how to generate a sale, I always tell people this in anything you do. I don't care if you're selling purses, shoes, dogs, cats, video cameras, chips. Doesn't matter. You got to ask. You got to know who your client is. You got to know who you're dealing with. One, and just ask. People are so afraid to ask a simple question. Do you want to buy this? Do you think this is valuable? Do you think this is something you could use? You miss, Michael Scott said it best, and Gretzky, I think. You miss 100% of the shots you don't take, right? It's already a no without you asking. If I don't go up to that individual and say, do you want to buy this? It's already a no. Without me asking, it's already a no. But you just taking that leap of faith, no matter what your project is, no matter whatever your product or project, whatever it may be, as he said, the passion is the first thing, and making sure your product is that damn good that people want to buy it. And understanding that if 100 people tell you this product sucks, and you're the only one believing in your product, keep asking another 100 people if you're that passionate about it. And if you're not, cut the loss and walk away and keep moving on. But I think the biggest thing is focusing not only on the first sale, but just focusing on how to approach the first sale. Take the shot. Don't sit here and worry, is it ready? Are they gonna like it? Does my website, is it using Sans or is it using Times New Roman? Just get your product up and running, let's get it moving, and just continue the hustle, continue the conversation. I think that's all it is.
Thank you. I think that's excellent advice, and you know how the old saying goes, if you don't ask, you won't receive. So this next question is for Mike, and this might be our last one before a quick Q&A. What marketing techniques do you find most useful, and what things are you implementing currently that separate you from the market?
So in my world, I have a lot of connections because I worked at Department of Homeland Security, right? And so it was actually my job to be a cyber evangelist across the country. So I have maintained all of those relationships across 16 critical sectors, across state and local governments. I was at a security conference a few days ago in Vegas. And in that conference, there are people that I didn't know that know me. And so the key for me is not reaching the people. The key for me is for those people to believe in what I'm doing. So I'm spending my marketing money and my marketing time trying to get them to know what I'm doing and then believe in what I'm doing and then to participate for free in what I'm doing, right? So it's not me having to spread the word, it's them spreading it. And I've also talked about, we talk about it as if it is a revolution. And that's the word I use with them. And they love that because everybody wants to be a part of something. And then I talked about the SEO work. It's really important because, again, if you go look for a cybersecurity company on the web, the largest 10, 20 companies will come up on the first 100 pages over and over and over and over again. And so when you talk about disrupting the market, in my world, disrupting the market is getting on the first or second page of Google. So that's my world, and that's how we're doing it.
Thank you. Thank you guys so much. I open up the floor to very quick Q&A. Question?
In thinking about an entrepreneur versus an employee, they're both very different mindsets when it comes to both money, when it comes to life, when it comes to perspective. Now, when one thinks about a successful entrepreneur, they see that, for an employee's example, okay, they have to go, they can, let's say if they're successful, they can take a salary, they don't have to worry about getting laid off, getting fired, or they're living the life that they want to live. Based on that, if someone were to tell you those questions, what don't they see when it comes to being an entrepreneur versus an employee?
I guess. I think what people don't really see as an entrepreneur is legitimately the absolute hustle and the responsibility on your back. I think people really take for granted that, I'm an employee, I feel great, and I'm doing my 9 to 5, and I'm just complacent, I'm okay, that's fine, that's great. People like that. To be honest with you, I would love to go to an office every single day and be able to check out at 9 to 5. I think that's incredible. That, to me, is the most exciting thing in the world. But at the same time, as an entrepreneur, you're the last person to eat. if your team is structured correctly, you're the last person to eat. You're the last person to sleep, and you're the last person that's going to be in that office. And you have to accept that. That's the biggest thing. I think the biggest takeaway as an entrepreneur is you got to enlist it in your blood and your mind and your head that this is my life. I may not sleep, I may not eat, but listen, this is my passion, this is what I'm going to do. I think the difference is between employees and entrepreneurs, and I think they have a great commingled ability, is that simple idea of being bigger than the organization and feeling that you're part of the organization as a whole. I've seen so many employees that are my employees for the fund that are incredible, that I feel like they're entrepreneur mindset right to the core. And it's a mindset. It's not, oh, he's an entrepreneur because he started a business. No, it's a mindset. It's a straight up mindset. What do you think, Evan? Yeah. Evan was going to take a step. You're going to take a step? All right.
Okay, I appreciate hearing from all the men here, but my basic question is, where are the women on this panel? I've been an entrepreneur for more than 20 years. I bet there are a lot of women entrepreneurs here, a lot of women in these industries. Why aren't there any on your panel? Why don't we...
Yeah, Josh, where are the women?
Okay.
What's wrong with you?
Humor is very nice and funny, but it doesn't answer the question and doesn't respond to your audience. Women make up a large percentage of entrepreneurs. We deserve a space at the table. And the more diverse your company is, the more successful it is. That's been proven.
So it's funny, the two women that were supposed to be on this panel canceled. So I wish they could be here, but they're not. There are, but they canceled last minute on me, so I had to, fulfill those slots as quick as I could.
I want to change the subject. Can I have a question?
Sure.
My question is to Mike. Hi, Mike. My question to you. So, as a small business owner, if it's not a secret, you just mentioned that you have liability if one of data is breached. Could you give a couple examples? What does it mean, breach? So how your data can go to some other source, and what liability you could have from that?
Okay, sure. So, there are many threat vectors, and every day we learn about new ones. Things as simple as you being phished. Somebody that you believe that is reaching out to you. We all know what phishing is. Somebody's reaching out to you. You've authenticated them for some reason. They know something. They mention a conversation that you had. You were at the same conference, whatever it is. Somehow they get you to load and execute a payload that drops malware on your computer or so forth, so on. Right? It could be malware on your computer. It could be some executable that it dials out to. And essentially, it sets it up for them to extract information every time you're logged on to the internet, right? And so what happens is you become liable for the data that you keep on your computers. So what we purposely do is, in building our perimeter, is we don't keep any of the data, right? So Google Cloud, there are lots of organizations that will provide you a service, and they're pretty secure. The key is that when you start to have a bunch of your own proprietary data, you want to then invest in systems where you have a private cloud or a hybrid cloud, because I don't necessarily want Google to have that information, because even though it's secure to stop hackers from getting in, they now have my information, right? And so that's what we're saying. And so what a lot of companies don't understand, especially a small company that may not have the expertise, do not hold the data, do not hold payment information. Our payments are done through 2 or 3 sources, including PayPal or other, but we don't hold the data. It's a third-party company that does. And so we don't have liability at that point.
All right, guys, I think that's it. Let's give a round of applause to the panelists. Thank you guys so much. Really appreciate it. Thank you, audience. Thank you, everyone, for coming out and spending this night with us. We're going to have a networking event on the rooftop now, so if you guys like, head on up to the rooftop and connect. Thank you so much.